Good morning, everybody. Thank you very much for joining us this morning again for a fascinating presentation. Stephan Pretorius talked to us all the way from London this morning. As you probably know, he's spoken to us before. He is the Chief Technical Officer of WPP, which is the largest advertising company in the world. Stephan grew up in Pretoria, went to St. John's College, did a law degree at the University of Witwatersrand, and did a law degree in media and telecommunications at the Columbia Law School. He worked for Mnet in various capacities, and then became the CEO and Chief Global Technical Officer of Wunderman, and he joined WPP in 2018. He has a vast technical staff that reports to him. Stephan, thank you very much for joining us, and looking forward to your presentation. Thank you.
Thank you, Gert, and good morning, everyone. So this morning, I'm going to do something slightly different. I think some of you might have seen my previous presentations. I spoke to you nearly a year ago about the impact of COVID on the workplace and how we were adapting to work by working remotely and just at the beginning of the COVID lockdowns. I then spoke to you a couple of months later about artificial intelligence and creativity, which is really kind of an exploration of the degree to which AI is being used in the creative industries and what impact that would have on creative functions and jobs. Today, I'm going to talk to you about Big Ideas 2021, a hedge fund of the future. And so the first thing you might be asking is, why is Stephan talking to you about a hedge fund? Which is sort of what everyone on this chat is thinking right now. And the reality is I'm sort of going to talk to you about a hedge fund, but I'm not going to talk to you about a hedge fund. What I'm really going to talk to you about is trends in technology. So to be very, very clear, this is not financial advice. I'm making an official and formal declaration here. So while I'm talking about financial advice given by others as a way to illuminate technical trends, this is not financial advice. So just be forewarned. So the hedge fund I want to talk to you about is a business called ARK Invest. And ARK is a hedge fund that many people have not heard of, yet it's one of the most successful companies in the space today. And the reason why I want to talk to them, talk to you about them, is that they function exclusively on this concept of disruptive innovation. And they believe that if you invest and identify disruptive innovation early enough, or if you see it early enough, you can make enormous outsized gains in terms of financial investment. And the reason for that is that disruptive innovation drives cost declines and cuts across sectors, and therefore it's interconnected in a way that most other trends aren't. And you'll see as I go through this presentation today how a lot of the trends that they identify and invest in are in fact interrelated and support each other. So the first thing to outline is basically the strategy that ARK has of identifying cross-sector trends, cross-sector strategy themes. And these are the main 10 that they focus on. So they focus firstly on net new disruptive innovation. They focus on autonomous technology and robotics. And that is not necessarily only physical robots that you would imagine in a production line for a car company, for instance, but also software robotics. In other words, software that automates business processes, more commonly known as robotic process automation. Thirdly, they focus on genomic revolution. This is the idea that you can actually change the genomes of people in order to prevent certain diseases or to design certain diseases out of human populations altogether. They focus on the next generation internet, which is really about the physical infrastructure that the internet will become in the future. Fintech, sort of self-explanatory. Space exploration, a la SpaceX and those kind of companies. Mobility as a service, so this idea that mobility does not have to be the ownership of a car. Mobility can be a service that you can plug into and use whenever you need to. 3D printing, everything from medical equipment to houses can be 3D printed today. A big trend of innovation focus on Israel, which is not a new phenomenon. Many of you have read Startup Nation and books like that. And then lastly, cryptocurrency, everything from blockchain and in between. So those are the main broad themes that they focus on. And I'm sure you've seen many of these things in the news articles or the financial press that you might have read. The way they come up with their themes and their research, though, I think is absolutely fascinating too. And this is a very untraditional way of doing financial research and analysis. So firstly, they have a completely open source approach to what they do, meaning that they source from everywhere, but it also means that they publish everywhere. So, while a lot of financial information is normally very proprietary and kept very much, sort of private to the investors in the fund or the fund managers and analysts, ARC has a completely open source approach to the research they do. And everything I'm going to be talking to you about here today is information that they've made available in the public domain that can be downloaded by anyone from the internet. And I'll give you the link for that at the end. But really, the model that they adopt really focuses on these sort of three big information sources. So traditional research sources, financial research, online and social media, and then crowdsourcing from specialists. And in between, they then focus on, or they then create three roles within the organization. So firstly, they have traditional analyst teams. That's the A at the top. They then have these sort of portfolio management teams that focus on the kind of the research, the fundamentals. And then very interestingly, they have this concept of theme developers. And these are people who identify the trends and the themes along which they need to invest and identify future disruption. And so, everything that they do and the themes they identify is a level of thinking that I don't think we've seen in many, in many kind of financial investment companies. But it is certainly proven to be extremely successful for them, as you will see. So they publish annually this report called Big Ideas, and they've been doing this for the last 5 years, which is interesting in that you can now look back 5 years and look at the predictions they made in 2017 to see whether they've come true and to see whether they've been accurate in what they've predicted. And so what I'm going to be talking to you about today is really the content, or some of the content from Big Ideas 2021, which again, I said is available online. Now, the first question you might ask is, well, are they good? Have they been successful? And if you look at their performance over the last year, you'll see that they outperformed virtually every index. Well, actually, they have outperformed every index available, sort of reaching nearly 10 times the return of the S&P 500, over the same time period. But of course, you might say, well, everyone made money in 2020. There was the GameStop phenomenon. A lot of people made money on Bitcoin. People who had invested in Tesla made a lot of money. So, are they really that good? And so if you look a little bit more longer term, if you look at the 5-year horizon, you'll see that even over a 5-year horizon, they are significantly outpacing the S&P 500 by nearly 6 times over the same period. So very, very, very successful long-term performance. Right. Now, who's behind ARC? And this is actually sort of a story in itself. Most large fund managers are men, and ARC is managed by a woman, Cathie Wood, which you might not think shouldn't be a big deal in 2021, but actually the financial services industry is still fairly undiverse, and for that reason, it's a great data point that ARC is managed by a woman. And Cathie Wood, really became famous when in 2018, she predicted that Tesla stock would hit $4,000. Everyone thought she was absolutely insane. At the time, Tesla was still building cars in tents on a disused airfield. And, while everyone thought Elon Musk was brilliant, they didn't really think that Tesla could become this successful. Now, the only thing that she got wrong is that the price point that she predicted became true 2 years earlier than what she predicted. And ironically, even though a lot of what you'll see today looks incredibly outrageous in terms of the predictions that ARC and Cathie Wood are making. This is a trend that, if you look back to the 5-year Big Ideas reports, that is almost consistent. This idea that the things that she predicts will happen are happening faster than what even she predicted they would happen. So take that as a word of indication. So this report, and really for anyone who's interested in investment, anyone interested in innovation, it's a fantastic read, and but it's also incredibly dense and very long. So think of this as the too long didn't read version of the report. If you're not going to read it, then hopefully you'll get a taste of what of what it's about from this presentation. It's about 128 pages, so definitely a big volume of content. For that reason, I'm not going to cover everything today. There are 15 categories or sections in this year's report. We don't have time to go through 15, and if I tried, I'd sort of give you all a headache by the end of the 45 minutes. So I'm only going to focus on a couple that I think are really pertinent, and also that I find personally the most interesting: deep learning, the reinvention of the data center, virtual worlds, digital wallets, electric vehicles, and delivery drones. And you'll see in a bit why I've chosen those specifically. So firstly, let's talk about deep learning. So deep learning, as you might remember from our previous talk, is a subset of artificial intelligence, and this is really a form of artificial intelligence, or a technique within artificial intelligence, where machines are writing software themselves. In other words, this is not just humans programming machines to do certain tasks. This is where machines learn from data and from ongoing changes in the environment to write software themselves. And most famously, it's probably pioneered by the folks at DeepMind. DeepMind is a London-based AI startup that was acquired by Google, and very famously, they use deep learning to develop some of the AlphaGo and other autonomous game learning software that I think I spoke about last time as well. Now, what's interesting here is that ARC estimates that deep learning as a software development technique will add $30 trillion to the global equity market capitalization over the next 15 to 20 years. So, which is an enormous amount given the total market capitalization at the moment. And so really what she's predicting here is that software 1.0, which is sort of roughly where everything that's gone on until today, this idea of code written by humans, generated a huge amount of economic value, but code written by data or by machines is going to outstrip that significantly over the next 15 years, which is a very kind of sobering but also very important sort of macro concept across this entire presentation. And the reason why deep learning is so important is because it is powering so much of what is creating value in industry today. So everything around conversational computers, so being able to speak to computers or computers being able to listen to you speaking, is driven by deep learning. And I think all of you can still remember a time when you couldn't speak to your phone, right? I mean, my children don't remember that. They think that you were always able to speak to your phone, and your phone would understand what you're saying, regardless of the language, regardless of your accent, regardless of where you live in the world. And of course, conversational computers are driving a lot of the interface solutions for how we interact with computers these days. Secondly, this whole theme around self-driving cars and self-driving mobility, all of that requires deep learning, because you have to continuously adjust to the environment. And then lastly, all the large consumer apps that today are really kind of gaining enormous traction in terms of adoption. Pinterest, Snap, TikTok, all these consumer software tools are using deep learning. So, the point is really that deep learning is the computing underpinning for a lot of these kind of mega trends in adoption. But what's really interesting about deep learning is that it requires an enormous amount of processing. So, you know, while it becomes cheaper and cheaper over time, you know, like following Moore's law, computing power is becoming cheaper. The amount of processing that you need in order to facilitate deep learning is roughly 10xing every single year. Right. And this creates an enormous demand for computing power, which leads to the next theme I'll cover in terms of data center capacity. And this is really what's fascinating about the shift from a regular linear compute to deep learning is also that the underlying chips, the computer chips used in order to power this AI, you know, is fundamentally different from what we've been using in the past, right? And I think this is the for those of you who follow this at all, you know, Intel obviously was the kind of the big darling of the chip kind of manufacturing industry for many years. That is now being disrupted, and it's creating an enormous amount of you know, opportunity in the data center market. So, you know, I think the point that you know, that sort of deep learning is one of the fundamental themes, really cuts across a lot of the rest of the report. But you know, the staggering nature of this in terms of the volume of economic activity, you know, is really you know, is really something to bear in mind as we go through the rest of this. Right. So what does this mean for how we actually use compute? And this really is, let me just give a little bit of a background in terms of the macro shift. You know, as many of you know, computing power has really for a long time been centered on firstly mainframes and then personal computers, basically in the kind of the years from about the 80s to the 2000s. And for the last 20 years, there's been this move from computing power from PCs and mainframes to the cloud. Now, the cloud is really just someone else's computer, but basically what it is an infrastructure of very large data warehouses, computing warehouses that are managed by companies like Microsoft, Google, and Amazon. And Amazon Web Services is probably the largest one of those. And you know, they even have a large footprint in South Africa, where actually a lot of the early Amazon Web Services was developed. Now, what's happening in these large data centers is that, of course, they're full of computers and they're full of computer chips. Historically, they were full of Intel computer chips. But what's really happened, as a result of the shift to deep learning and artificial intelligence, is that the kinds of chips in these data centers are changing. So previously, we worked with chips called CPUs, and that has now moved to a new, sort of a more modern architecture called graphical processing units, which are far more relevant for AI processing. And this really kind of creates a massive opportunity for disruption again, because while everyone thinks that Intel is sort of impossible to be kind of supplanted from their position of primacy, what's really happened is that with the focus to to AI and deep learning, a UK-based chip company, ARM, which is actually in the process right now of being acquired by NVIDIA, is really kind of seen to be the biggest recipient, or the kind of the biggest gain, of this trend. Now, NVIDIA, many of you will know the NVIDIA logo. You'll see it on your PCs. They were known historically for making graphical processing units for PCs. They've become the largest supplier of graphical processing units for data centers, and it's driving all their growth at the moment. So what you see here is that a situation where in 2020 ARM has virtually no kind of share whatsoever of the data center market. In 10 years' time, ARC is predicting that they will have a 71% share of the market. Now, if you're an investor, that is very, very significant, because it means that you get rid of your Intel investments and you start focusing on ARM and NVIDIA. If you believe this trend. But what's also interesting is that as a result of this transformation, we see an enormous rise in ARM chips being used in developer PCs. So not in consumer PCs, but in the machines that developers and software developers use. And at the moment, even nearly half my development team have migrated to ARM-based processors for their personal machines because they need more computing power locally as well. So the impact is not just in the data center market. And I think what's really interesting about this is that it's actually all about the unit economics of different computing architectures. So what the things that matter are firstly performance. So ARM has better performance than most Intel chips. The cost per hour to operate it is cheaper. That's the second graph there, which means that your overall performance per cost per hour is the measure that everyone looks at that is significantly improved. So this is really just about being able to produce better computing performance at cheaper costs going forward. All right, so just to kind of take a quick summation, we've got this mega trend in artificial intelligence and deep learning, creating a lot of economic value, driving an enormous amount of demand for new data centers and computer chips. Now let's focus on one of the large applications of that technology, which is virtual worlds. Now, virtual worlds is a sort of a catch-all phrase for any kind of consumer experience that creates some form of alternate reality, and whether it be entertainment or for professional purposes, so it's a broad category. But really, the easiest way to think about it is that it's really around video games first and foremost. So you'll see many of your grandchildren probably spending lots of time on this, whether it be Fortnite or League of Legends or FIFA 2021. Video games has become a massive industry. And in fact, the video game industry today is larger than all Hollywood blockbuster movie revenue put together. It is an enormous commercial kind of category. But then it also includes augmented reality and virtual reality. And so just to level set, augmented reality is where effectively you are completely aware of your physical environment, but you are able to augment that environment by the use of a mobile phone or some kind of other device. So for instance, very simple applications like being able to download an IKEA catalog, choose the chair that you want, and then to place that chair in the room with your phone is sort of something that a lot of people are able to do and do today already. So that's augmented. And then virtual reality is where you are completely immersed in a virtual world, where you have on a headset and sort of an earphones, and you're completely immersed in the sort of virtual world in order to either attend a virtual concert or to be able to practice a certain medical operation or procedure. And what's the outtake here is that ARC is really sort of predicting that revenue from these three combined categories will grow 17% compound annually from about 180 billion today to 390 by 2025. So more than doubling in the next 5 years, right? So massive investment opportunity, but also trend in consumer behavior. And where's this revenue going to come from? So firstly, in gaming, it really kind of comes from the sort of shift where in the past people mostly paid for the games and then spent a little bit of money on in-game purchases, loot boxes, additional gear for your characters, etc. To a model in 2015 where the revenue was split basically 50-50, and today already 75% of revenue comes from in-game purchases. So, it's sort of a freemium model where people can get the game for free, but they are then encouraged through various sort of game themes to spend money in order to upgrade their characters, buy additional kind of equipment, etc. And this is sort of again, you might not have seen this with your own children, but certainly if you ask your children about how your grandchildren are spending money on gaming, this is a very, very prolific category of teenage and young adult spending, and it's everything from a new car for a racing game to being able to to dress a character in a role-playing game to upgrading your skills or up leveling to another level in a game. But it's definitely the entire kind of economic model of games has shifted as a result of this trend. But certainly augmented reality is also set to scale, and there I think what's really happening is two things. On the one hand, you've got people building augmented reality into smartphones. So if you have a relatively new model of smartphone, I'll give you an example. On the new iPhone, there's a feature or an app called Measure, which is effectively a way that you can point your phone at something, click the dot, drag it to another point, click the dot, and it tells you exactly the distance of what that you're looking at, and that is effectively a very simple augmented reality application that's being built directly into smartphones. But you also have things like augmented reality glasses. Snapchat brought out a pair of these a while back. And all these kind of experiences are becoming a lot more consumer accessible. So, ARC is sort of forecasting that over the next 10 years, this is a 130 times growth opportunity. So from $1 billion today to 130 billion by 2030. And really, I think the trend here is that the market size is just absolutely phenomenal, right? So you're talking about something which is going to grow cumulatively between these three different categories: the virtual reality opportunity, the augmented reality, and the in-game spending. You're moving from less than $5 billion of value to nearly $28 billion of value within 5 years, right? Now, paying for all these kind of virtual goods and services, one of the biggest drivers of that is digital wallets. What is phenomenal is that they see this again as a $4.6 trillion opportunity, and I'll explain to you in a second how they get to this number. It's really based on looking at the amount of money that people spend via digital wallets as opposed to other payment mechanisms, cards, ETF, etc. And so what they're saying is that digital wallets, while today they're valued at between sort of $250 and $2,000 per user, they could become as valuable as $20,000 per user in the US by 2025. Now, clearly there are massive kind of global, variations in that value, but the $4.6 trillion is based purely on the US opportunity. But of course, this is a global phenomenon. So in the US, the main mobile wallet companies are businesses like Venmo and Cash App. In Africa, M-Pesa has been doing this for many years, and effectively, they are the payment platform for countries like Kenya and other places in Africa. And if you go to China, everyone pays by Alipay or WeChat Pay. People do not have credit cards or debit cards in their wallets anymore, and it's become absolutely the de facto way of paying for services or goods. So the $4.6 trillion that she speaks about as a US opportunity is magnitudes larger if you think about the total global market. And this graph I found absolutely fascinating. So what this compares is really China's GDP, which is the black bars, compared to the mobile payments made in China over time. And as you'll see here, while it was a very small percentage of total GDP in 2013 and 14, it exceeded GDP in 2017 and is now nearly 3 times China's GDP. Right, so the amount of money passing between people, and the flow of money is now 3 times as large as the entire GDP for the country. And the other thing which is really fascinating is that already today the number of accounts for digital wallets is surpassing the number of deposit accounts for all the large major financial institutions in the US already. And really, if you think about it, the reason for that is that the biggest cost for banks is really acquiring new customers, while for digital wallets, if you want to receive money from someone else, you need to activate that digital wallet to receive the money, and therefore you become a customer yourself and you start using it. That kind of viral effect of how digital wallet software is passed between users makes the acquisition cost very, very cheap, and therefore it can scale much faster. And what's really interesting is if you look at the type of payments that people are making with digital wallets, it really sorry, this is the customer acquisition cost, just sort of showing you the value or the cost of acquiring customers, more than between $250 and $1,500 for credit cards, less than $20 for digital wallets. This is the breakdown of what people are spending per on their mobile wallets, on their digital wallets, and so as you would imagine, the bulk of that is for commerce, for paying for goods and services, making payments, to people, rent, etc., insurance, and it's very easy to add that up then to a $20,000 annual spend on your digital wallet. So again, this is the kind of the total calculation showing us where we are in time at the moment. But if the 230 million US digital wallet users were to increase in value to $20,000 per year, that becomes a $4.6 trillion opportunity. So what are the implications? The implications are companies who leverage that infrastructure or that ecosystem, are going to be successful, but also the underlying service providers like Venmo, Cash App, etc., are going to be massive growth stocks in the future. And it was maybe obvious to everyone, but if you just want to point out, the one thing that this shows is that the traditional financial services companies, JP Morgan Chase, Citibank, HSBC, none of those companies are the leaders in this space. They are not the ones driving this phenomenon. So obviously the disruption effect on traditional financial service companies is massive. All right. Now moving on to electric vehicles. I know in South Africa this is not really such a big phenomenon yet. But if you live in Europe or the US, electric vehicles have gone from a curiosity even 5 years ago to completely mainstream in less than 5 years. And really, what's driving that is the increasing availability of different models and lines, improvements in range and performance, but ultimately cost is a very big feature. And so ARC speaks a lot about Wright's law. So Wright's law, in a way, is sort of the opposite of Moore's law. Just to remind everyone, Moore's law is the concept that the computing power will double in power and halve in cost over time. Wright's law is the opposite, which is the more that you make things, the better you become at making those things, and therefore the cheaper they become over time. So as the manufacturing of electric vehicles becomes more popular, the price point and the quality will decrease. And so, what I think is really interesting is that even though, for instance, in 2020, car companies had a really tough time selling regular cars, petrol-driven cars or diesel-based cars, the electric vehicle sales has continued to grow, even during the lockdown, and very significantly last year, in fact. The other point, and this is the point about following Wright's law, is that the price points are coming down. So even in 2019, the comparable cost of an electric car versus a petrol car was nearly double. This year it's still more expensive, but it's sort of almost palatable. In 2 years' time, there'll be complete price value parity, and by 2025, electric vehicles will be cheaper. And and this is sort of, this is not a long time frame, right? So if you start thinking about what decisions will people make about car purchasing 2 years from now, there is absolutely no way that people are going to be buying petrol cars from a price comparison perspective in 4 years' time. Secondly, what's happening is that in most developed markets, the governments are putting restrictions on the ownership and purchase of petrol vehicles and diesel vehicles, and in fact, if you have such a car, you sort of almost beginning to think about writing off the investment because it's going to be worth nothing in a couple of years' time. By 2030, there will be no sales of petrol cars in the UK at all, and I think it's earlier in some European countries. Now, one of the big things is that, in order to scale like that, the traditional, car manufacturing companies do have to make a massive transition, in their supply chain and the engineering from petrol to electric, over this period of time. And, I think what this model is really sort of predicated on is that, companies like Ford and Volkswagen and so on are going to be able to make that transition. Being very close to some of these companies as clients, I can tell you that they are engineering their entire businesses to respond to this trend, and and not doing so in a lackluster way. I mean, and this is public domain knowledge. Ford is committed that they will only make electric transit vehicles, in 2 years' time. And this is sort of, an enormous market for Ford. They were even bringing out performance electric cars. There's a Mustang Mach-E, which is sort of a performance hybrid electric car that they brought out, which has been probably the most successful new car launch in Ford's history, and that was only launched last year. All right. Then drone delivery. Now, this again, some of you might have heard about this. Some of your children or grandchildren might be sort of telling you about drones, or have brought them kind of with them on holiday. So people see them as toys. People see them as maybe ways to take aerial photography. But this trend really focuses on drones as a way to deliver goods or to transport people, which again, it feels like a fringe opportunity right now, but have a look at these forecasts. So in summary, basically what ARC is forecasting is that drone delivery platforms will generate at least $275 billion worth of revenue, of which the hardware sales and the mapping revenue is about 62 billion of that. So the actual machines and the software to run them, but the rest is actually the commerce revenue. And so, in terms of passenger, drone usage, there are a number of experiments happening at the moment in the US, particularly around New York, the JFK airport, where they're looking at both the battery life, but also the the safety and air safety requirements. And really, the big opportunity for them is the fact that the cost of delivering goods and people via drones is significantly cheaper than doing it via any other mechanism, including helicopter or obviously cars, which is a massive congestion problem in that area. But the other point is that this is sort of the one factor regarding passenger transportation. The big consideration in terms of delivery is whether you pilot these drones remotely through a kind of remote control, or whether they are autonomous. And this is really where AI becomes an enormous driver of capability, because autonomous drones requires AI that can sense the environment in order to not have accidents and not crash into things. But you can see the opportunity there on the right-hand graph. The remotely piloted cost is $7.80 for a 10-mile drone delivery. It's 25 cents if you do it autonomously. Right? So the cost of operating the delivery infrastructure becomes much cheaper. And this is really, if you think about the different use cases, I mean, there are a myriad, but things like, for instance, delivering medication to people, particularly in remote areas, is vastly cheaper through drone delivery. And in fact, there are many current trials that Amazon are doing in Australia, for instance, where they are delivering medication via fixed-wing drones to people living in outlying farms. The packages are never heavy, and so drone delivery over long distance is very cheap and very fast. Then there's the whole sort of idea of getting people from kind of congested areas like airports to their homes, and again the cost is vastly cheaper or vastly faster than taking cars. It might be slightly cheaper, it's slightly more expensive though at this point. There's a whole lot of drone delivery or drone use cases around industrial use cases, architects, building inspectors, offshore kind of oil rig inspection, where doing it with drones and high quality cameras and lidar cameras is significantly cheaper and faster than doing it with humans. And then obviously kind of small parcel delivery, where companies like Amazon is already experimenting at scale, with drone delivery for Amazon Prime. So as you sort of start thinking about these different use cases and categories, you realize that it's actually a concrete opportunity with real business applications and real kind of like cost time benefits to look at. Now, obviously what drone delivery is sort of supported by very significantly is this massive shift to e-commerce that we've seen across the world, and again. As we spoke about in my first presentation, COVID has really, created more growth in e-commerce in a year than we would have seen in 5 years under normal circumstances. So, there's been this enormous kind of forced shock to the system that people, being stuck at home and the lockdown has created. And so, the e-commerce trend has been massively accelerated. And with that, the need for delivery. And so today, if you walk around London, there's less traffic because people aren't driving to the office and so on. But there's certainly a hell of a lot more delivery traffic. And people are Amazon are dropping parcels, sort of coming down the street at every second house, 3 or 4 times a day at the moment. So the need is tangible, and I think what's really is sort of really interesting is this, that has accelerated the need for cleaner, faster, more efficient delivery of parcels. And certainly, this is what's driving a lot of this kind of drone parcel delivery opportunity, which Arcus is estimating will go from effectively 10x over the next 10 years, from $15 billion to $115 billion. It could also massively speed up food delivery. Now, if you think about companies like Deliveroo or DoorDash, or any of these kind of food delivery companies, last mile companies that deliver fast food and restaurant food to people, again, might not feel like it, sitting in Hermanus, but I'll give you an example. We have a sort of at least once a week we get food delivered to our house, sort of for a Friday evening, family meal, and you can order everything from a sort of 5-star, sort of hotel restaurant food, all the way through down to pizza. So this is not just about pizzas and burgers anymore. I mean, the variety is every single restaurant in London effectively is doing home delivery. Now, the problem with home delivery is that the food always arrives cold. And so people try to accommodate that with better delivery routes, better kind of packaging, better kind of hot boxes, etc. But fundamentally the food is always cold. So the opportunity, if you can do it faster by using drones, would be enormous and would actually further support the existing trend. And again, here, this is sort of broken down as a kind of a single use case opportunity, moving from 18 billion in 2025 to 216 in 2030. And then the whole kind of commercial drone delivery for packages and so on. If you think about Amazon, ARC estimates that entire industry of building the drones, operating them, the software behind it, etc., is by itself nearly a $70 billion opportunity. So again, investing in companies that provide these services, build the drones, operate them, is an investment opportunity all by itself. All right, so I'm gonna pause there because I'm sure there are lots of questions, and I just want to make sure that we leave some time. But I just wanted to, before we close, just again put a big disclaimer on that this was not financial advice. This is me talking about the trends identified by people giving financial advice. And so please, if you're interested in this in further detail, or you want to take action on this, please visit ARK Invest directly, and take everything with a pinch of salt. But certainly, from a technology innovation perspective, everything that they've identified for me rings true in terms of the work that I do every day. If I look back, as I said, to their 5-year reports from 2017 and thereafter, everything that they predicted came true sooner. So, again, as I said, if you're interested in understanding disruptive trends and the impact that will have and what that then means for investment, I'd urge you kind of to spend more time with the full Big Ideas report. Thank you very much.
Stephan, thank you very much. What a fantastic world we're moving into. And thank you for all the preparation. I'm sure there are many questions.
Letitia here. I've got a very silly question. I have visions of crowded skies with drones flying everywhere. Could that not be a problem?
Yes, Letitia, that's so I think you sort of have to think a little bit back to in history, right? So we the famous story when people were sort of predicting, or when they were thinking at the turn of the last century about transportation, and there were people saying that if London keeps on expanding the way it's expanding, we're going to be 2 meters under horse manure very soon, right? And then of course the car got invented and that problem went away. Now we have streets that are so congested that you can cycle faster from point A to point B in London than you can drive. And actually, I do this regularly. A colleague of mine lives, close to me here in my neighborhood, and he drives this electric car to work, and I cycle, and I'm regularly there 20 minutes before he is. So you then fast forward and you say, well, what's the world going to look like when you have electric drones flying around the sky? And I would sort of argue that given the fact that they're electric, largely silent, very small, that would be a better and easier way to get things around than big delivery vans with people inside them. So so think small and then extrapolate the problem out. If you think about today I buy a charging cable for my phone on Amazon. What happens is that some guy has to pick it up in a warehouse in Slough, drive 20 miles across London to my house to drop a parcel that's this big through my mailbox, right? So you've moved a delivery truck, right? And it's a van, but it's, a van at this stage, not electric, sort of polluting the environment, 20 miles across London with a person inside to come and drop a little cable that's this big through my mailbox. Now, if the drone delivery infrastructure is correct, the environmental impact, the noise impact, the everything else of a electric drone delivering this to my door would be fractional, right? And so yes, it's kind of hard to imagine what the sky will look like, but it's very possible that these things can fly on the streets. There's no reason why they can't fly around existing infrastructure, and effectively then replace cars, or you could probably have 10 drones flying in the same space that a car flies or that a car drives, right? So they could use existing infrastructure, or in other cases, like in the Australian example I mentioned to you, they're just flying at a fairly high altitude and then dropping the parcels when they get close to where they're meant to be. So I think there's a lot to still figure out at scale, and to if you have 1 million parcels a day being delivered, what would the sky look like? Will there be accidents, etc.? But I think you sort of almost have to suspend disbelief, because on a unit economics basis, it is infinitely less impactful on the environment and on space management than our current infrastructure is. So I think we'll figure those things out.
Thank you. Thank you. I was just having a vision of my street with all these old people having ordered stuff.
Well, I mean, imagine being able to sit on your stoop and get your medication prescription delivered to your right to your table, as opposed to having to drive into town to get it and
Fantastic.
finding parking, etc. Right?
Yeah. No, thank you.
Okay, Pat Hart here. Just extension to what Letitia said. I'm just waiting for a big Boeing to suck in a drone, and then we've got a real problem.
No, of course. I mean, look, and Pat, I think this is exactly why the Federal Aviation Authority is leading all these trials, right? I mean, the whole JFK, moving passengers from JFK to Manhattan through drones that carry people. I mean, it's being controlled and completely managed by the Federal Aviation Authority. So everything that you today know about flight paths and kind of restricted flight areas and zones and whatever else, all these things have to apply. I mean, you can't. We'll have to be in the same way that you can't fly your helicopter, through a big airport. You won't be able to do this with drones. And there are ways there are technologies to actually control it. I mean, many airports have these sort of blocking zones, which effectively prevent drones from being able to technically fly into them, because the frequencies that control them are blocked. But you're right. I mean, this is not without risk. The people responsible for the infrastructure are sorting it out.
Thank you.
Hi, it's Jenny Morris here. All these innovations clearly have huge implications for employment in the future. And I just wondered if any thinkers are considering the impact on the existing disparities in income and equality of opportunity between the first and the developing worlds.
It's a big question, and there are a lot of people thinking about it and also working on it, Jenny. I think the let me answer the question a little bit broadly, and then more specifically about first and third world disparities. I think more broadly, so there's this massive area of software, and we use it extensively in WPP, that I mentioned before, around automation and process automation. Really, it's not a new concept, but it's often thought about as a kind of a way to automate manual processes. So like production lines or manufacturing plants that are automated, etc. I mean, I'll never forget. I used to when I was a kid, I went to the Simba chip factory with my father and saw how machines kind of took everything from washing the potatoes to cutting them to spicing them to putting them in bags, and I thought this was amazing, right? So I mean, that's sort of manual process automation, but you have this sort of idea now of software process automation, where in many businesses people do a lot of manual repetitive tasks, and you can actually program a machine to do those tasks for you, so that you don't have to go through the same 20 steps every single day. Now, what this does for us, just the software process automation, is that it frees people up to do thinking, and it frees people up to do more creative work, because they're not just doing a lot of manual repetitive work. And it's typically things like data entry, or moving data from one file to another file, copying and pasting stuff from one place to another place. I mean, these are, all of us have experienced this in our daily life, and it's tedious and soul destroying. The next level of sort of process automation, though, is what's now being coined as intelligent automation. And intelligent automation is actually a far more sophisticated way of managing decision making in business. And there's a fantastic book that's just been written by a gentleman called Pascal Bornet, entitled Intelligent Automation, that talks about this process whereby big businesses are beginning to codify, document, and actually automate a lot of the decision making in their businesses. So you you take a business's entire enterprise resource planning software data, everything about their supply chain and their manufacturing and demand from retailers, etc. And the software makes recommendations that would optimize your throughput, minimize working capital, increase your supply chain optimization, and over time those decisions that you make then become automated as they become stable. So this idea of moving from humans doing the work supported by machines to a future where machines are doing the work guided by humans. And I know this might sound slightly, sort of frightening and intimidating, but it really is a far more it's a far more kind of rewarding and it's a far more stimulating way for people to work than a lot of the drudgery that we expect people in modern jobs to do. I mean, effectively, through the 90s and 2000s, many people effectively became glorified computer chips. They did a whole bunch of sequential tasks that any computer could do and actually do much better. So, I mean, I'm sort of generally very optimistic about a future where humans are using machines to do boring, repetitive tasks. Your question, though, about the sort of disparities that will create between the first world and the third world, is a really important one. And I think it's probably part of a bigger trend, though, which is that globally, the divide between people who have the education and the background and the resources to develop these technologies, have access to them, or in fact design them, and the people who don't, is absolutely massive, and it's becoming bigger. And I do worry about that, because I think I keep saying to people that ask me the question about AI taking humans' jobs, I say it's not the AI that will take your job. It's another person who knows how to use AI that will take your job. And I think that is very much true. On the positive side, though, there are incredibly positive developments that I see. I mean, there's the African AI Indaba, which is a thriving group of African academics that are working in AI. What's interesting about the space is that it's absolutely a global phenomenon. So AI research is being driven very heavily from China to Africa to South America to America and everything in between. And so it's a very much a globalized phenomenon and a very much a globalized kind of capability. But again, even though it's global, within those countries, the people who are working in that field are still very much the kind of educational, intellectual elite of that country, right? It's not the masses. So where that leaves us overall, is a very difficult question, I guess. But I do think what it means is that the way that people are productive in society, moves either to things that can't be done by machines, so service industry jobs, food, hair, personal care, things like that. But it takes away that kind of like entire, administrative layer of workers in an economy. And I think that's a sort of an inevitable trend, right? So you either become, an ideas person, someone who's creative and can solve problems and come up with ideas, and can use machines, or you become someone who works in the physical realm, doing things that machines will never do, whether it's be, sport training, being a chef, etc.
Thank you.
Stephan, I think you mentioned the example of banking in Kenya, where because of the lower cost of banking, it's massively given access to people in rural areas to banking. But I think the same can be done on many other areas where technology can help poorer societies increase their productivity, increase for agricultural productivity, etc., and actually help the third world to upscale economically.
Yeah, I think that's absolutely true. I mean, I am, to give you a good example, there's a very successful payments processing company called Stripe, which some of you might have come across, that effectively make the settlement of payments between kind of banks and credit card companies and so on very effective. Now, Stripe has completely ignored Africa until this point, but there's a group of Nigerian entrepreneurs working actually in Silicon Valley that just created a business a couple of years ago called Flutterwave, and Flutterwave, is a settlement platform for the entire African financial, ecosystem. And so, those kinds of technologies are now making it, far, as you said, Gert, far more possible to move money around between countries, between people, thereby stimulating economic activity and reducing the cost of transactions and payment settlement. Right. So I'm completely with you. I'm eternally optimistic about the possibility of technology to improve human life, while I'm very skeptical about exactly where we are right now. but I think it's a good balance to keep, right?
Johan Retief, you have your hand up.
Internet was part of the scope of your talk, but the advent of worldwide satellite-based internet must have a massive effect on what's going to happen in the future. Would you like to comment on that?
Yeah, I think that's absolutely true. I mean, I think the sort of general global availability of satellite-based internet is definitely a massive trend. I mean, there've been a number of people over the years that have tried to build these low Earth orbit satellite kind of networks. I mean, at the moment, I have a colleague who lives in Seattle, and he has a farmhouse literally in the sticks, and he's been working there for the last year, working on his only connectivity being Elon Musk's, low Earth orbit satellite internet network. And, I think what it just means is that connectivity becomes a non-issue going forward. The price points are coming down significantly. It's slightly more expensive than wired or optical fiber still. But, again, it's one of these mega trends that within the next couple of years, the global availability of internet connectivity will be a reality. I mean, to give you an idea, the cruise line industry focuses a lot on the cost of connectivity. As early or as sort of as recently as 10 years ago, they couldn't get people more than sort of 10 megasecond on a cruise ship. They can now get people 100 megabits a second on a cruise ship. I mean, and this is all using the same technology that you referenced on.
Thank you very much. Thanks, Stephan.
Any other questions? Stephan, I've got another question. What does ARC say about the next surge or possibilities in general economic activity? I mean, some of the figures you've indicated are very impressive, but it's kind of limited to the kind of industries you've been talking about, the high end of the technology. What about general economic activity? Does ARC say anything about that?
I'll need to go back and look if they have a kind of a macro view. I mean, I think, look, I think the only way that well, two things have to happen. I mean, if those numbers for these disruptive technologies and categories are correct, and total economic activity is stagnant, then it means that they're going to be massive losers, right? I mean, that's the one conclusion you've got to draw, that someone's going to lose massively if everything stays net zero. But I don't think that's the case, and I think overall global GDP, has to probably double every 5 years in order for, based on the trends that we're seeing at the moment. To what extent that is driven by quantitative easing, and to what extent that is real economic growth, I mean, I'm not really sure. I'm not a macroeconomist. I'm sure there are people on this call that are more equipped to talk about that than I am. I mean, I think and this is sort of slightly, sounds like a bit of a cop-out, but my focus has always been on where to create kind of new value, within both personally, but also for, within WPP. And so, these trends are so big that even for a company with a market capitalization of $15 billion, you only have to get a couple of them right, to be able to have a significant impact on your business. So I think it's a very good question, Khad. I don't know the macro answer, but it's maybe a good question to come and get a macroeconomist to come and speak to us about innovation and growth and the overall impact on GDP.
Stephan, I was wondering, as you were speaking, is there any one area where this whole development is being driven from, or is it fairly widespread?
You mean geographically?
Yes. Is it largely based in like Silicon Valley, or is it wider than that?
No, I think it's much wider than that now. I mean, as I said, I mean, the internet's really kind of globalized, technology capability and software development. And so some of the best AI researchers are in China. I guess there are kind of regions, Silicon Valley obviously is enormously strong because of the concentration of the big technology companies there. But even they would tell you that they pretty much globalized organizations now. Like I said, I mean, Amazon employs about 4,000 people in Cape Town that build Amazon Web Services. So even in South Africa, we're contributing to these global trends. I mean, in general terms, I would say, the innovation is sort of is concentrated around the historical centers of focus. So Detroit is still a massive focus of innovation around the automotive category, as is sort of parts of central Germany, where Volkswagen and these people are located. The French seem to be incredibly good at business process automation and sort of applying analytical tools to business processes. There's a real kind of concentration of French innovation coming from there. And then I think the other big one, which I sort of briefly mentioned in the introduction, but not really spoken about, is just this kind of phenomenally generative space in Israel that really comes out of the sort of the military military government complex in Israel. Virtually every single one of the Israeli high tech or startup companies that I've worked with have founders that were in the intelligence services in Israel and worked in things like terrorist detection or security and surveillance and things like that, and then have taken those innovations to commercialize them. So Israel is a very, it's sort of like a super highly concentrated version of Silicon Valley. It also has more continuity, so people tend to there's sort of a lot of people move in and out of Silicon Valley. The Israeli startup scene, particularly around Tel Aviv, is incredibly stable and obviously very culturally specific as well.
Stephan, this has been very interesting, very stimulating. Thank you so much. It's an amazing world that we're moving into, and I'm so jealous of you to be able to be at the pinnacle of it all. What an opportunity.
If I can just, in conclusion, say the following. I mean, I think what fascinates me is how fast these things are moving, even for people who are working in it every single day, right? I mean, and to be honest with you, I don't think I could have lived in a better era in terms of being forced and being expected to learn on a daily basis. Every year when I read the ARC report, I see things that I've and I learn things that I didn't focus on or didn't really kind of expect. And so the only way to kind of to stay at all relevant and kind of an up to date is to be relentlessly curious and keep on learning and not think that you know it all, right? It's a learn it all mentality. Thank you very much. Thanks everyone.
It really has been fascinating. I hope we can invite you back again in a few months' time, but at least next year when the ARC report has come out again.
Wonderful. Thanks, Khad. Thanks.
Stephan. And thank you everybody for joining us. I'm going to end the meeting now. Goodbye.